Okay, you are welcome. What we have here is supply to demand or demand to supply entry model. Now, this particular one I want to talk about is supply to demand reversal entry model, which is downtrend to uptrend. The first thing first is to get our market structure correctly. So you can see the market was making an inducement there. Price went to take it, came, give structure like this, and then there's a BOS, break of market structure, with candle closure below. Then price went up again, give the structure, we are following it. Then the first high that is taken out when the market is in downtrend is inducement. Then price came again, tap on this directional order block, gave a reaction, a pullback, went up again. When it went up, it came down, take this pullback, and our counter inducement, tap on this extreme directional order block. Then price did what? Price went up to go and close above this major structure high. Now, that's just the framework of the trade. If price had entered, mitigated this point, this engineering liquidity EAQ, then this trade will become invalid. Then what we'll be looking for is entry to take to trade to the downside, to continue the downtrend. But when this signal came, this supply to demand signal, there was no price did not tap on this extreme liquidity, which is engineering liquidity, and price did not tap on this extreme order block. So price gave us our entry before it taps into any of these. It did not tap here, it did not tap into that. So when price gave us our entry, inducement, direction order block, gave a pullback, it failed it, came back again, take out this counter inducement, and then tap on this extreme order block, which is valid with all the rules as already stated, and then price went up and take up the price went up and take out the major structure high. Now let's see it on live chart. This is the trade I entered today. This is a 24.24 risk to rewards ratio that I made today. Now I was following the price. Lower market was making lower high. Then price came, took out this structure, inducement. Price came, took out this structure. I was like, okay, that's good. The next thing to do is to look for the recent market structure. You can see here, price came, give a pullback, inducement, take out the inducement, then you make something like this. This is my entry for supply zone. So when price gave such a reaction, you can see price now came down and took out this low and closed below it, making this another market structure. Then I was still following the price. I was following it. I was like, okay, let me look for what will happen next. So price gave inducement. Price took out that inducement, went up, tap on this decision order block. Let me show it so that it can be clear. Went on the decision order block, gave a reaction here, went up again. I was looking at this point. This is our engineering liquidity. So I was like, okay, maybe price will try to break it. But you can see there, price did not touch it. Let me zoom in very well. Price did not touch this engineering liquidity. If price had even touched it with wick or anything at all, I wouldn't have entered this trade. So since price did not touch it, I was watching it, and then you see now, price came down. You see, price came, took out the inducement, tap on the order block, gave a pullback, went up, then it came back to take out this counter inducement and tap on this counter order block, making this a supply to demand entry model. Now, with this type of model, I normally enter this trade directly. My order block is giving me all the things I need. What my order block has given me, my order block gave me fair value gap, imbalance, there's fair value gap, then see the order block again. This is a very, very good candle as an order block. In our candlestick pattern, you might have learned this. It's like a doji. Price is not yet decisive on where to go, whether buying or selling. There's fight between buyers and sellers. So price finally came. It tapped on it. Price tapped on it, and then price went up. Now there's when price my entry was there, so when price was coming, I was like, wow, it seems this place want to get invalidated at this point. I was very afraid. So to make my fear to go away, I went down to the lower time frame. Let me see my lower time frame for confirmation entry. Let me go to my 1 minute. Okay, I went down to the 1 minute time frame. I was like, okay, this line that I drew, this white line, that's the white line. I was like, okay, this is the last order block inside the order block. It's like a single candle order block. So I'm looking for single candle order block mitigation. Although this trade I entered directly, I didn't come back to 1 minute to look for entry, so I just entered at the 15 minutes time frame direct entry because I was confident in it. Now, when I came down to the 1 minute, I saw that okay, this week there's a candle there that mitigated the extreme, the single candle order block on the 1 minute time frame. So that boosted my confidence. I said, okay, this trade is a good trade. So I was also looking for this entry to be mitigated as this single candle order block. That price will come to this place, but that's another entry. So price missed it, it didn't come there, and then price went up and give us our final TP. So I hope this is helpful. I hope this is very helpful, that to know that yes, this our entry signal works very well. And just to be able to spot them, follow the rules, and one will be very, very successful. So I wish every one of us the best as we continue trading to profitability. Have a nice time. Cheers.